Private debt cements itself as a strong, highly diversified and in-demand asset class as investor appetite and the search for financing expands.
Private debt has not only penetrated the vast majority of investor portfolios, but it continues to be extremely attractive for international investors and fund managers.
The average growth in assets under management this year was of 40%, with the market now reaching almost 182 billion euros. Loan funds, set up as reserved alternative investment funds, are forging ahead at a steady rate with an 8% increase this year. The EU remains the geographical investment target of choice, with 44% of respondents favouring it. The investment strategy of Luxembourg private debt funds is mainly focused on 3 debt strategies: direct lending, distressed debt and mezzanine.
While we see impressive growth year on year, private debt funds themselves instill and stimulate growth in real economy where other sources of finance do not suffice. They add to diversity in funding and help balancing the liquidity supply and demand for businesses of all shapes and sizes. And that's exactly why the private debt funds are a cornerstone for the European Commission's Capital Market Union.
Looking ahead, we expect further changes from the European legislator. The review of the AFMD, in particular with regards to loan originating funds, may trigger some additional requirements for those funds. Fund managers shall take into account these potential changes and may have to adapt their operations accordingly.
Luxembourg is constantly adapting its rules to ensure that they reflect the expected best practices of the industry participants. Luxembourg is also often upgrading its toolbox, enabling the market to reach its full potential. To get the full picture on the Luxembourg private debt fund industry, download your copy of the survey on alfi.lu.